Welcome back to the program. Well, someone who could be forgiven for saying, "I told you so" today is the Shadow Assistant Treasurer, Matthias Cormann. He has long argued that this mining tax wouldn't raise much, if any, revenue at all, and joins me now. Senator, thanks for your time. You have long argued that this was a flawed tax and wouldn't raise money. Let me put to you, though, the argument from the government that it was because of the collapse in iron ore prices in the second half of the year and the very high Australian dollar. Was that a contributing factor?
Well, certainly commodity price volatility and also changes in currencies are some of the factors that contribute to changes in revenue collections. And we've said right from the word go that this was a fiscal train wreck in the making, among other things, because it was always going to be a volatile revenue source. Given variations in commodity prices, production volumes and exchange rates and so on, we're going to have a significant impact on revenues collected. But that is why we've said all along that it was so irresponsible for the government to link that volatile mining tax revenue to a whole series of spending promises which had a fixed increasing cost. In fact, the mining tax, the way it was structured, even if it had raised the revenue the government thought it would raise, was always going to leave the budget worse off and was exposing the budget to structural pressures.
But you're not saying you have a problem with spending money from tax you expect to collect only when it's a volatile tax like this?
The mining tax is a very bad tax for a range of reasons. One of the reasons is that it was a volatile, it was always going to be a volatile revenue generating tax with, if anything, the revenue downward trending over time, because it was established at a time when commodity prices were at record highs. When commodity prices are at record highs, you will invariably get a supply response, and Treasury in fact expected revenue from the MRRT to come down over time, but when the cost of all of the related spending commitments continue to increase over time.
The iron ore price has recovered since then to an extent, so presumably revenues may be higher in the second 6 months of its operation.
Well, the problem the government has is that commodity price volatility is one factor, but it is not the only factor, and it's not even the most significant factor in why it hasn't raised any revenue
What's the most significant factor?
Well, there's a range of features, of course, in the mining tax deal that Julia Gillard and Wayne Swan has signed with the three biggest miners. Principally, the promise to credit all state royalties, including future increased royalties, against any mining tax liability, and any unclaimed royalty credits, incidentally, attract more than 10% compound interest. So, I mean, if you consider that $8 billion worth of royalty payments are made nationally per year in relation to coal and iron ore, that's a significant...
If the government fixed that, and that would clearly upset the mining industry, and already the Minerals Council is warning the government not to touch that because this was part of their deal. But if they did that, and it did raise more revenue, what would be wrong with that?
Well, I don't think the government can fix that, and this is the fundamental problem. And you see, when this whole process started with the Henry tax review, Wayne Swan said this was going to be root and branch reform of our tax system to make it simpler and fairer. And one of the recommendations from Ken Henry was that there should be a national profit-based tax to replace state and territory royalties. Now, that is a very important qualifier, replace state and territory royalties. Now, the MRRT doesn't do that. And of course, the federal government never ever sat down with any of the state and territory governments to discuss with them the implications for them out of the mining tax structure before signing on a dotted line with the biggest three miners.
Don't some of those states bear some of the responsibility here for jacking up their royalties?
Well, I don't believe so, because you see, this government and the way they've structured the mining tax deal gave a direct incentive to state and territory governments to increase their royalties, and I explain to you why. For example, in Western Australia, for many, many years, there were concessions in place for royalties on iron ore fines in the Pilbara. But of course, and you know, over the years, these sorts of royalty concessions are offered as part of competitive federalism to attract investment into a particular state. But now, of course, because of the mining tax, where any royalties were creditable against any mining tax liability, to the extent that royalties were lower, the benefit wasn't actually going to flow to the mining company. The benefit wasn't going to help attract a particular mining project or mining company into a particular state. So it was just going to increase the mining tax revenue to Canberra. So essentially, the cost of the concession that was provided by states was, you know, directly increasing revenue to the federal government. So of course, that was never going to. Let
me ask you about the spending side of this equation. The government has made clear today, Bill Shorten made clear that this all the spending measures associated with, whether it's superannuation, or small business instant asset write-offs, that will still be delivered from consolidated revenue. Can you just clarify? The coalition will scrap all of the associated
number
measures?
one, Bill Shorten needs to explain where the money is coming from. But because between now and 2020, the minerals resource rent tax, according to the government, was going to raise $38.5 billion. $38.5 billion. So if he thinks that he can, fund all of these promises that Labor has attached to the mining tax out of consolidated revenue, then he's got to show how he's going to increase taxes to make up for the revenue shortfall.
So will you get rid of all of them?
Well, as we've said, and I think I might have been on this program last week, we will not proceed with any of the measures attached to the mining tax, with one exception, and that is the government's legislation to increase compulsory super from 9 to 12%.
So you'll have to find that revenue from somewhere else.
And obviously that is something that we've been doing in recent months. We've been going through a very methodical process through the Shadow Expenditure Review
on that, finally,
Committee.
You've said today, along with Joe Hockey, that you won't release your costed policies until we're into the election campaign. Well,
that is a responsible course of action, and I asked the question of the Parliamentary Budget Office today, and they confirmed that we can't responsibly finalise our pre-election policy costings until we have the most accurate available data which comes out of the pre-election and economic fiscal outlook. So we will go through our methodical process. We will not get distracted. We will stick to our timetable, and we will release our full costing after P4, but in good time before the election.
Senator Matthias Cormann, thank you very much for joining us this afternoon.